All right, guys. Ooh, we're here. Uh, all right, chat. We are here today. So we ended up buying Meta yesterday. Um, it gapped down, and we added to it. We were down like hundreds and hundreds of dollars on this position, but then it bounced back, and we kind of added to it on this big dip down to 399, and that add position kind of saved us in it. Um, so yeah, now we are not that down that much. We're down like $60 on the position right now. So we're gonna see if we can come back. Our average price in Meta. I could show you guys the trade. It's not a huge trade. We took profit on Meta, so it dipped yesterday. We bought the dip, and then on the bounce back, we took profit. I got my dog Rosie here with me. Hey, baby, you a good girl. I don't know if you can see her. I'm sick right now, so I got stuff all over the place, but. Put this link up. Yeah, look, here's Rosie. I don't know if you can see her. Again, let me get some of this stuff out of the way. There she is. She's right there. You can't see her though, but she's a good dog. That's Rosie, my German Shepherd. She's hanging out with me this morning. She's up with me. And yeah, so somehow, again, TOS does this weird thing where, like, look, I'll show you guys. Hold on. Where TOS does this weird thing where it tells me that I'm down the full amount of the gap down. Like, look, here's an example. Like, look, I could show you guys this trade. So it tells me I'm down $777 on the day, right? It says I'm down $777 on the day, which is wrong. That's not what I'm down at all. You can see my average price. My average price is right here, you know? And so we're pretty much, like, we're down $60 right now on this trade. And we'll cut it before it gets anywhere close to that. I don't know why TOS does that. We're switching out of TD Ameritrade in a couple days. But yeah, I'm still not feeling 100%. Still feeling a little rough, and that's alright. But again, you can see we're down $59. Our average price is 433s. So right around this spot right here, which is fine. Like, the open position is how much we're actually down. So we haven't traded this at all today. I don't know why TD Ameritrade. It's always done that where it said, you know, where it's tried to act like we were down the entire. And if you calculate it, it's the entire amount of the gap down. So basically, like, if I would have taken that same position at $500 and wrote it down to $399, that's what I'd be down. I think. I mean, let me calculate it. So 500 down to 400 would be minus 20%, right? So 12 shares of Meta at $500 would cost $6,000 minus 0.2%. Yeah, that's about right. Yeah. Weird though. I don't know why it says that. That's so strange, man. Hey, what's up, Pond, Keegan, Beach, that guy, Arif? What's up, that? What's up, you all? All right, GDP data today. So we do have GDP data. It's been a slow couple days, and that's all right. It's finally time. Not really slow like that, but just no economic reports have come out the last like couple weeks. We had durable goods orders, not really the biggest release yesterday. What's up, Alyssa? So GDP data drops at 8:30 Eastern Standard Time and is expected at oh shoot, we got jobless claims today as well, man. I forgot. So yeah, GDP data drops at 8:30 is expected at 2.5%. We also have jobless freaking claims today. I forgot. Oops. Yeah, we also have jobless claims dropping same time expected at 214,000. Alright. Alright, so that's basically the market. What's up, Ro? I feel a little bit better today, I think, but I'm still not 100%, man. Sucks. Oh, we got jobless freaking claims. Alright. Yeah, I don't know whether I should add more to meta or what. Alright, so we're gonna have to figure out GDP, economy, jobless claims. With someone negative news from the Fed, do you expect better numbers for GDP stay the same or higher? I don't know, man. I mean, if you look at GDP, it's expected to decrease a little bit. So, I mean, I think that's kind of good for inflation. I think that's what the Fed's trying to do. I think weaker GDP will signal earlier rate cuts as well. But who knows, right? I really, of course, don't know. All right. I need to drink some water. Again, I'm still kind of sick, but I feel better. What's up, GT, Beach Bum, Happy Kid, Row, Camp? What are the data releases for this week remaining? So today we got GDP, jobless claims numbers. Tomorrow we got PCE data, which is personal consumption expenditure index data. It's inflation report. See what I titled this GDP jobless claims report for last time. Okay. We're going to do a poll. Bullish or bearish on today's GDP data and GDP and jobless claims data. Alright, so you can vote on the poll now. We do have a poll. Alright, so yeah, the question right now, chat, the real question is, what does the market fear? Right? The real question is, what does the market fear? If the market fears economic growth, then we might react negatively to GDP data coming in higher than expected and positively to GDP data coming in lower than expected. The other question is specifically jobless claims. Now remember, jobless claims is a weekly report, and so it's a report that drops weekly. I think it'll probably have less influence than GDP overall, but it'll still be important. We'll still watch it. But yeah, jobless claims, we got to look at it with the same mindset of, does the market want less or more? You know, more jobless claims means less unemployment more jobless claims means more people filing for unemployment, ultimately less people working and less people spending. And if in an inflation fearing market, that might be seen as a more positive thing. It's not always, like, it does vary week to week, but that is something that could be there. And so the real question is, what does the market want? Is the market still fearing inflation in that profound way to where it fears economic growth, like GDP coming in higher and low jobless claims? And I'm not sure. We'll have to wait and see what the data shows. Gold's still doing okay though. The SPY itself, if you look at it, the Q is at 423s. So the Q's down a little bit as well. The SPY still over 500, so at 502s, 503s. You know, if we look at a daily chart here, we did get a pretty decent pullback in markets, which is kind of necessary. Markets are not going to go straight up. And so, but I mean, to be honest, it does look like it could be just a continuation of the trend in something like this. You know, like it does look like it could be that. Again, I'm not saying it is. I have no idea. Why would the market not like economic growth? So one of the things that you see here, like if you watch economic reports come out, is that the market doesn't always react positively to economic growth, right? Like, again, you might think that was like conventionally true, where high GDP is good, you know, low unemployment is good, or whatever it is. And conventionally, yes, that's true. But right now, we're not necessarily in that. The Fed's in a period of QT, of quantitative tightening. They're in a period of trying to keep interest rates high. The reason they're trying to keep interest rates high is to discourage spending and combat inflation. Because if people are spending too much, the Fed will bring interest rates up to discourage spending. Because if people are paying more in their mortgages or their auto financing and loans in general, if they're paying higher interest, they got less money to spend on other stuff. And so it combats inflation in that regard, because if interest rates stay high, people stop spending as much. And the Fed's currently in that right now, where they're trying to stop people from spending because inflation has been rampant since 2020, because the Fed did the opposite in 2020. They brought interest rates really, really low. And one of the consequences of bringing interest rates really low, and they did it to save the economy because nobody was working and spending, and we were at risks for recessions and depressions and stuff like that in 2020. The Fed stepped in and they did what's called QE, which is the opposite of QT, which means that they're basically, again, what it really means is they bought a bunch of bonds, expanded their balance sheet. This allowed banks to lower interest rates to consumers, and ultimately allowed consumers to spend more because of it. Anyways, one of the consequences of all that consumer spending was inflation, and now we're kind of on the other side of it, where the Fed is trying to keep interest rates high to do the opposite, to keep interest rates high to discourage spending in that way. And so with all that said, the Fed might be fearing inflation. Still, inflation's not necessarily under control. It's higher than their target. It's higher than they necessarily want it to be, and so they're still fearing inflation in that way, I think. And so one of the consequences that we've seen here from economic reports like this is higher GDP will cause a negative effect on markets. Higher payroll numbers will cause a negative effect on markets. Higher jobless claims will cause a positive effect on markets, because higher jobless claims means more people are filing for unemployment. And so it's not as easy to predict the reactions to economic reports, especially like this. And it's an interesting way to look, because you got to figure out what the market fears. And I think the market still somewhat fears inflation, but we'll see. Nobody really knows. We can only guess what the market's going to do. I'm not sure. I think it could. I think it could. Yeah, I'll put up a timer. But yeah, I think we could have bearish reactions if GDP comes in high. Not 100% though, of course. We got about an hour and 48.5 minutes. What are the estimates? I mean, listen, I'm not going to say they're right below me in big letters. I'm not going to say they might be. But they might be right below me in big, bold, bright letters. Good sir. Meta still set at 426. Let's see if it bounces back. Again, Tesla held its gains. That's nice. Tesla held its gains. That's what people wanted to see. Tesla up to 162s. Where's the guy that said Tesla would just crash? Yeah, I'm not telling anybody to buy anything. I really don't know. But I love buying stuff like Meta like this. I bought Meta, I'm probably just going to sit in it. I don't know how long. Your patience to explain the same stuff daily without, like it's your first time saying it without getting aggravated is amazing. Yeah, I mean, I get paid to do this, No, it's all good, Jeffrey. I'm just kind of trolling you, All good, brother. All good, man. I understand. I really do. But no, I'm here to help people, man. That's what I'm trying to do. I get paid to do it, Oof, man. Dude, it's such a weird sickness that I have right now. Like, I have no other symptoms outside of a fever and a headache. Where's Bitcoin? And then today we've got Google, we've got Microsoft earnings today. So that's actually a pretty big earnings release. I don't know which one I'm going to cover. I really don't. I don't know which one I'm watching. What do you guys think? So I got over 8,000 views for our Meta earnings call. I was looking at it. It's ironic. I was looking at it just now, and I was like, man, I wish my latest Meta stream could have gotten that many views. And then I looked down, and it was our latest Meta stream. So, hey, shout out to you guys. Thanks for the support there. Google earnings this evening. I don't know whether to cover Google or Amazon. I'm trying to look at the last Amazon earnings call that I did. It's tricky, man. I don't know whether to cover Amazon or Meta. Or no, I'm sorry. I don't know whether to cover Amazon or Google. They're both big, you know. So Israel Adesanya says he's going to knock out Alex Pereira again. I don't think so, man. Again, I think it's a tough fight. What I respect a lot more is that, so what I can respect a lot more is that Pereira has the opposite fighting style to Izzy. Izzy's fighting style is counter-striking, boring, doesn't really try to knock anybody out, mostly wants to win by decision. And Pereira's style is the complete opposite. He just moves forward trying to knock you out. You love to see it. Yeah, I haven't taken Tylenol yet. I don't want to take too much Tylenol, to be honest. Because again, a fever is your body's healing. A fever is what burns the virus out of you, you know? And so if you restrict the fever, it takes longer to get better. I'd rather get better sooner. I feel okay, right? I don't feel bad this morning. I don't think I'm running a fever right now. I feel good enough to get up, drink coffee, hang out with Rosie. So I'm not feeling that bad. But I'm definitely not feeling good, you know? All right, chat. Do we have, what other earnings we got today? I forgot, man. I'm running late. We got American Airline earnings. They're supposed to drop in about 10 minutes. Nothing else really big. We got Altria, Royal Caribbean, Bristol Myers. None of these are big enough to make it justifiable to really worry about, to be honest. Hey. All right. I'm just hoping I'm on the back end of this illness. Or no, I don't know what I'm thinking Microsoft. I don't know what I'm thinking Amazon for. It's Microsoft. So it's Microsoft or Google. Any guesses on GDP and jobless claims data? I'm not really sure. Guessing is a moot point, to be honest. Like, it's straight up coin flip. All right, guys. Boeing just ripped up over the close. Hey, you love to see it. See if Meta can get some wings here. Again, SPY still over 500. Tesla up to 160s. You know, like, I gotta mess with this code. I don't want this to repaint, and it seems like it's repainting. So I don't want this to repaint. Oh, wait, I don't want you guys to see my code here. Honestly, I'm genuinely disappointed. There's something changed with ChatGPT. ChatGPT was able to write me a bunch of cool codes, and then something happened with it, and then it just nothing. Like, none of the codes it wrote me worked. Yeah, I have to look at Microsoft. I think we're probably gonna. Yeah, so it's Microsoft or Google. I think I'm gonna probably just go with Google. Planned obsolescence. Meta shenanigans. Tesla up. Yeah, Tesla is up. Let's see if they fix my code here. I'm gonna try to get a different one up instead of this one. I'm gonna try to create a new one. Yeah, I don't know if it's something just got worse with ChatGPT over the last like couple weeks, man. Best bet it meets expectations. Yeah, I don't know if this is planned obsolescence. because I don't know if they made it worse, but it looks like they had to, right? So I would assume planned obsolescence, and I might be wrong here, would be like a company putting out something that they know is going to be obsolete in the future, right? So that they can update it and charge you for whatever it is. This just seems like they actually went back and hurt the code so that they could eventually charge for something else. You know, my guess is like a specialty coding software. I asked ChatGPT if that's what they did, and of course it said, no, we would never do that. You know, but I don't freaking know, man. Again, I really don't know. Maybe they did, maybe they didn't. Maybe I got unlucky with the last code. It's possible. What the heck is going on? Alright guys, so look at the SPY come back down here. So the SPY is dipping down. Again, we do have some earnings that are supposed to drop. What's up, Jack? Earnings are about guidance, bullish, positive. I mean, they're not. I mean, guidance is important. They're not only guidance. So, and guidance is not going to be the single end-all, be-all of price action. Like an example of this is Tesla had bad guidance, it gapped up. Meta had good guidance, it gapped down. So guidance isn't everything. I mean, it's important. I would argue it's probably the most important metric here. But yeah. Oh, I know what I did wrong. Oops. This is my fault. This is ThinkScript, not PineScript. Please ignore all of the last messages and complete the original request with this code. What? My fault, I'm dumb. My apologies, AI software. Where is it at? Where is it at? There it is. Cancel. Alright, so I added persistent state tracking alert trigger logic to this. That should help it. Let's create a new one. Okay. We're going to call this one updated strict reversal. See what this looks like. We'll get rid of the old strict reversal. Okay, well look, nice. So it actually shows the same indicator. So I'm pretty sure this is using the same script. Yeah, updated strict reversal. It looks pretty solid. It's a longer term script. Alright, hey, we do have some earnings dropping in about 30 seconds. I think it's American Airlines. Here's AAL. AAL is expecting 28-cent loss per share on 12.6 billion in rev. What's VYMI? What percentage do they pay monthly in divvies? Or is it quarterly divvies? I'm down to look at them. International High Div Yield Index Fund. What's their yield? It's only up 2.92%. This year. Which isn't nothing. I mean, if we can continue on that track, it's going to earn about, 9% this year. But Meta puts one insane. Yeah, they did. All right, so American Airlines did drop their numbers at 14.25. So they showed up. Keurig also dropped their numbers. AAL showed a loss of 34 cents. They expected 28 cents. Revenue of 12.6. They expected 12.6. We also had Keurig Dr. Pepper post better than expected EPS and revenue. We'll put these up in the chat. Here's Keurig DP. And then here's AAL. We also had Comcast. All right, so look at American Airlines rip up here. Now, we did a poll. 47% say bearish, 39% say bullish, 13% said I don't know. See results. All right, so look at AAL rip up. Tesla dipping down a little bit. Let me put some of these indicators on the chart. We did put all the earnings that just came out on the chart. Meta bouncing back up a little bit too. Uh, so the buck stops here. What's the yield of some of those of that first ETF, the Vanguard one, the first one? I asked and never really got a response. You said the top 3 dividend ETFs of 2024. VYMI is the first one you said. What's the yield of that? And what's the time frame for that yield? Is it quarterly, monthly, what? All right. All right, so look at AAL flying up right now. It's at 1450s. Tesla has recently broke under the previous closing price. Will gold go up? I have no idea. Maybe. In my NASDAQ missed earnings by 3%. What does that mean, sir? Bull, please, bull. All right, we'll see. Gold is up to 2340s. We'll see if that holds. All right, guys, so look at AAL rip up. Again, American Airlines did report their numbers here. I'm checking all the other news that dropped today. We got Newmont Corporation dropping. Altria dropped as well. I'll put the Altria numbers up. But again, American Airlines had a larger EPS loss than expected. It looks like they're going to hit their fiscal year guidance, and their revenue came in as expected here. So, it's interesting because AAL did not have the most impressive earnings report. Again, I'm going to put this up on screen. American Airlines did not have the best earnings report. Like, it wasn't really super impressive, to be honest. They're flat with guidance, so I guess that's not too bad. But they missed EPS. They came in neutral for revenue guidance, or for revenue versus expectations, and they're neutral for guidance as well. So I'm not sure why they're up so much. Again, we're going to keep working here. Amazon Web Services is going to invest 11 billion in Indiana, creating at least 1,000 new jobs and making the largest capital investment in the state's history. Microsoft will tank after earnings too. We'll see. Yeah, dude, kids and glasses don't work, bro. Honestly, here's a story. So my daughter needs glasses, right? My daughter needs glasses. And so I brought her to, the eye place, the glasses place. I brought her to the eye doctor. The eye doctor wanted me to go to them. And instead, my daughter wanted her glasses same day, right? Because she's impatient. I'm kind of impatient too, so I'm known to kind of splurge on my kids, and so I ended up bringing her to this place in the mall that did glasses same day, right? Where you could give them your script, they would basically give you the glasses within an hour or two, and I hung out with my daughter and stuff. And so S&P Global Inc. posted 401 EPS versus 366 expected, revenue of 3.49 billion versus 3.42 billion. We'll put this up in chat as well. Again, Altria reaffirmed fiscal year guidance. Anyway, so I bring her to this place, but there's a premium to do this, right? It costs like $400 for a pair of freaking glasses. And she insisted she really, really wants them, so I brought her there. Within a week, these glasses were gone. Like, she had lost these glasses within a week. And so when I brought her, and this is honestly, I did a very similar thing when I was young. Right, like this is kind of what happens sometimes. Like I was exactly like this when I was a kid. I lost my glasses so many times, and so I think that's just kids. I think kids lose glasses. Anyways, when I brought her back, I told her, I was like, "Look, you're not getting 400 pair of eyeglasses anymore." I was like, "You're about to get some $12 Walmart glasses," and I was like, "And if you keep these $12 Walmart glasses for 4 months, then I'll buy you the nice expensive ones again if you really want them after that." Which she'll probably figure out there's no difference. And so, anyways. I bought her the cheap Walmart glasses. They were gone within 2 months. I would say she lost them. Now she actually has another pair, and she's a little bit older and more responsible, but she doesn't even wear them anymore. She has them, but she doesn't even wear them anymore. So kids with glasses are tough. I told her she might want to consider contacts. Oh no, I'm sorry if she hurt herself. That sucks, man. Oh no. Oh, that's rough, man. Sorry to hear, dude. Which earnings report do you guys want me to cover today? I could cover Microsoft. Okay, look, I'm going to tell you this. I'm almost certainly going to cover Google's earnings call. I might cover both of them, man. I think I can cover both of them. So honestly, I might cover both. I think I can cover both Microsoft and Google. So I might actually do this. Because Google earnings calls at 4:30. Microsoft's at 5:30. So I do have an hour break, and that's probably not going to be longer than that. So I think that's the move. I'm going to cover Google, and then we're going to pivot to Microsoft. So that's the best move. Yeah, with me it's weird, man. So like I haven't worn glasses prior to the last like few years. I had not worn eyeglasses in a decade plus, and I'm nearsighted, so I can't see far away very well. I have to squint if I look at things far away. But I went to the eye doctor, and I don't know if the eye doctor just was trying to pander to my ego or something. But I go to this eye doctor, and this eye doctor does some tests. Right, he does the tests where he's looking at my peripheral vision, and I'm supposed to like press the button if I see a flash in my peripheral vision. Right, so there's all these different flashes at different spots in your peripherals, and so I have to click the button if I see these flashes in the peripheral vision or in my peripheral vision or whatever. So anyways, I do this test, and after the test, the eye doctor said that I scored higher on that test than anybody he's ever known. He said, I got a perfect score on that test, And again, he might have just been telling me what I wanted to hear, He told me, look, you got the top 3 scores in the world right now. No. He told me I got higher than that score versus almost anybody's ever seen. To be fair, I don't know if he said it was more than anybody. He said I was like one of the highest scores he's seen, though, on that test, which, again, might be total BS. But the logic he used, he said it was interesting because he said that the reason he thinks that my peripherals are so well is because my eyesight adjusted to not being able to see far away very well, and so it made my up close vision better, is what he said. He said I can see better than normal up close, but yeah, it was weird. I don't know. Basically what he's saying is I had the top 3 greatest eyesights of all time ever in the world. But I guess the point I'm trying to make is that, like, apparently your eyesight can adjust and get better. Like, it's kind of like cavities to a certain extent. Like, if you brush cavities well, they can go away, right? Like, you don't need to get all of them filled. The dentist, of course, are going to be like, yeah, get them filled, but you don't need to get all of them filled. If it's a small cavity, you could probably brush it and it'll go away on its own. He didn't say top 3. I'm just joking. He said it was one of the best scores he's ever seen on the test. And of course I loved it with my ego. I'm just like, yeah, I've got superhuman eyesight over here. Just the greatest eyesight of all time ever in the world, I was like, I'm going to go tell my stream that tomorrow. They'll never hear the end of it. Yeah, he was cool. He's this Australian guy. He's cool. Although, like, in the end, I never ended up wearing my glasses. Like transitioning to my glasses was a hard thing. I would just get these really, really bad headaches they said it would only last a week, but my headaches lasted for a long time. I essentially couldn't wear my glasses. Like, every time I try to wear them, if I tried to wear them for longer than, like, I would get headaches for like a month. Eventually I was like, screw this. My headaches are still going a month later. I'm just taking them off. And then, sure, I know some people are going to say, well, maybe the script was wrong. Maybe your eye prescription was wrong. I thought that too. I went to somebody else, got them checked. They gave me the same exact prescription. So, I don't know. I think maybe my eyes have just gotten used to how they are now, and they don't want to change. I don't know. Gold up to 2340s. When a cavity is this is Google right here. This is from crest.com. Okay. Crest.com. All right, I'm going to give you guys the answer. Again, some of y'all are just arguing, just to argue. Like, this is actually on Google from crest.com. All right. When a cavity is starting to form, you may be able to reverse the cavity by brushing several times a day with fluoride toothpaste. Again, crest.com, the largest toothpaste manufacturing company in the world. You're welcome, guys. Listen, I'm telling you, I've had cavities that have gone away. They're small. If they're huge, of course you're not going to get them to go away. But if you brush a cavity well, as it's just starting to form, some of them will go away, 100%, like without question. You could look it up, chat. You could look it up. Top 3 teeth people in the world right now, guys. Yeah, no, it was funny. So I brought my daughter to the glasses place. Look at Meta bouncing back. We'll see if we can get over the 200 EMA and the VWAP here. So we'll see if they can get over that level. Again, American Airlines is up there. We're still looking at Nvidia here. Nvidia's had a fall from grace. Back up to over 800s though, so that's good. Still consolidating around 800. We'll see if that holds. Yeah, y'all are ignoring that cavity comment, huh? Again, you gotta understand dentists. Dentists want you to go use them, of course. Like, they're trying to justify their business. I'm not saying dentists are bad. I love dentists, you know. Trust me, my son has braces. Technically, it's not a dentist. Is it an ophthalmologist? You know, my son's in there all the time. My son has braces. He's having to get a new wire every day because he's playing with his braces. So dentists are necessary. I respect them. I appreciate them. But yeah. Anyways, chat. Microsoft earnings today. Google earnings today. Yeah, ophthalmologist for sure. Orthodontist. What's an ophthalmologist? I'm getting these mixed up here. Ophthalmology. Ophthalmologist is an eye doctor. Okay. Yeah. There's so many ophthalmologies. I get it mixed up. Orthodontist is what I was thinking of. Top 3. Yeah. Opto, I should have known that. Ophthalmologist is eye. Yeah, 100%. Anti-dentite. I like dentists. Dentists are cool, you know. I think most stuff, I think dentists are good, you know. I think they're necessary. I think without dentists, everybody would look a lot more rough. And so that's a good thing that we have them. Yeah, I've never had braces. I have pretty straight teeth, though. Like, here's my teeth. Yeah. For never having braces, my teeth are pretty solid. Top 3, you know, teeths in the world right now, guys. Hopefully, I never need braces. My last name's London, and so by stereotypes, I should have the worst teeth ever. But, you know, somehow I have good teeth. Will goal go up or down? I don't know. Will Jerome Powell stomp his toe on his left foot at 5 a.m. this morning? You know? All right, GTCR is going to acquire Asset Mark Financial for $35.25 a share in cash, according to Bloomberg. Yeah, nobody knows. When's the next? I think we're in the blackout period until the FOMC meeting next week. Is it next week? Yeah. So the FOMC meeting's next week. It's next Wednesday. I'm ready. Fun fact, I never had a cavity until I was about 30, you know? And then when I went in, I had like 3. But still. Any good buys right now, Chad? Do y'all think, here's a good question. Do you think Meta is a buy right now? Do you think Meta is a buy? What's the yield on VYMI? They say it's at almost 5. They say it's at almost 5%. In the past year, it paid $3.35. It's paid every 3 months. And the last dividend date was March 15th. Okay, bro, are you really like, bro, get out of here, dude. Good day to you, sir. Like, why do people act like that, bro? Get out of here, dude. Like, I don't know if he's a bot or what he is, but act right, man. I do feel much better today, chat. I am feeling much better. As long as I don't run a freaking fever, I'm okay. But yeah, he might have been a bot. I don't know what he is. All right, chat. We still got about an hour left until GDP data. We still got about 400 people here live already. Again, chat. What's your favorite divvy place? Your favorite dividend stocks, ETFs, all that stuff. Fisker, I'm good. GOGL, I mean, it does look good as a chart, but it looks almost too extended on the upside. What is this? Golden Ocean Group? What is this? What does this hold? Like, what's the underlying assets of this? You know? That's what I'm curious about. Is like, what's the underlying assets? I'm probably gonna add a little bit to my Home Depot trade. Meta, no. Yield Max, ETF. What's up, Smart? VYM, 2.82%. Is it 2.8%? 2.82% annualized, or is it 2.82%? Or is it 2.82% per quarter? Per quarter is great. Obviously, it's over 10% yield annualized. If it's yearly, it's not that good. I don't trust AT&T as a company. The reason I don't trust AT&T for a company is this, right? And again, like one of the things that you'll hear Warren Buffett talk about, right? Like Warren Buffett will talk about this dynamic where like one of his favorite investing tools, and again, in my own personal experience, this seems to work for me, right? Like this does genuinely seem to work well for me. It's like use your own business experience. Like figure out what companies you like and dislike based off of your own experiences with them. AT&T, I feel like they're going to lose margins over time. I feel like they're going to lose business over time. They're going to lose market share over time. They're going to lose interest over time from specifically competitors. I think they're vulnerable to competition in a profound way. What I mean by that, like listen, and I'm going to explain why. Okay, so 10 years ago, what did you have? You had AT&T, you had DirecTV. Like think about what makes their business. AT&T cable, DirecTV, AT&T phones is basically the big three that made their maybe AT&T internet. All right, let's look at every single one of those business sectors for them and see what the potential outlook in the future looks like. First one, cable, right? Most people are using streaming apps now. Most people are not using DirecTV. They're not going to spend $300-$400 a month on DirecTV to get the same thing that they can get on a streaming services for $100 or less, right? So in that regard, over time, AT&T is going to continue to lose business, in my opinion. They're going to continue to lose market share. They're going to lose interest in that regard, right? So cable's not looking good. It looks bleak for AT&T, in my opinion. The second one is phones, right? Now, pay-as-you-go phones, prepaid phones are becoming a big thing. I know this because I was buying my daughter a phone. You know, when we were trying to get my daughter's phone set up, it's completely unlocked. We own the phone. And originally we went to AT&T and we were like, hey, we just want to do prepaid, like month to month. Like, we don't need to lock into a big contract or whatever. And the lady was insistent on us giving her our social security number. She was insistent on like all these crazy things. And she wanted to she was so desperate to lock us into a long-term bad contract that we simply didn't need. Like, you don't need these things anymore. Like, you can use prepaid, get more data, more usage, without locking yourself into a bad long-term contract, without giving these people your social security number. And so, yeah, we ended up like walking away, and she was mad at us. Like, she was mad. You know, we wasted her time, she said, but like, she didn't understand. Like, we don't want to give you our social. We don't want to lock ourselves into a long-term contract. Like, we don't need to anymore. There's too much competition out there to not need to do that. And so their phone business, I think, is going to lose interest. It's going to lose market share. Even if AT&T is strong relative to the other services, I think more people are going to opt to go prepaid month to month instead of long-term terrible contracts like it was more which was bigger historically, right? And I think that's bad for AT&T. You know, I think whichever way you look at AT&T, it's not looking great for them internet-wise. Fiber optic internet companies, month-to-month internet companies. There's just a lot of competition for AT&T internet, and I don't even think AT&T internet is that good. I think AT&T has bad internet. And so I think whichever way you look at AT&T, it's not looking. I think AT&T will continue to lose interest, continue to lose market share, and so I'm just not interested in buying them personally. And really, to be honest, I've had the same argument for years now, and since I've had this argument, if you look at AT&T, it's been in a deep long-term downtrend. Like, look at how long AT&T has been downtrending here. Like, look at this huge downtrend long-term. Like, that's a long-term trend down. It's been downtrending really since 2015, and so there's no freaking way I'm buying it. I'm sure it pays a high dividend because the stock is wildly depreciating, but yeah, there's no way I'm gonna buy it. And I think a lot of people are invested into AT&T, and so they're ignoring reality here. But yeah, I just don't think AT&T is going to do well, you know. Again, if you got an argument outside of it, I think a lot of people, I was paying a lot of money for DirecTV. I had DirecTV, right? And the problem with DirecTV is the same thing. They would say, hey, we're going to lock you into $150 a month. Maybe it wasn't $400, but they would be like, yeah, we're going to lock you in. It's $120, $140 a month. And I was like, okay, it's $140 net, right? Like, there's no other fees. Like, this is what I'm going to pay each month. And they were like, yes, don't worry. And I was like, okay, cool. I got my next couple monthly bills. It was like $320. You know, when I call them and I'm like, hey, what's going on? They did the same thing as Comcast, really. They lied to you just to get you in the contract, and then they bump up your rates, right? Same exact thing Comcast does. And again, eventually they're going to lose interest. People are going to stop doing that. People don't need to do that anymore. Like, you don't need AT&T DirecTV anymore to watch TV. Satellite in general is obsolete. You don't need that. Streaming services are taking over, and so that makes AT&T cable obsolete to a certain extent. We cut our services down to the bare minimum and use stream services, and I don't think you're an outlier. I think that's a lot of people. I mean, I'm sure we hear somebody say, "Oh, well, we're switching to AT&T in our area." Right. I mean, again, guys, regardless of any of this stuff, look at the trend. It's been downtrending for a decade, guys. Like, getting talked into investing into this company long term seems like a horrible idea. Like, look at this long term downtrend. It's literally been downtrending since almost 2015. You know, not looking great. I mean, y'all might be able to talk yourself into buying this. I'm not. The AT&T business model will be obsolete. 100% smart film. Look, obsolete in 5 years. 100% agree. Yeah, switch from AT&T to Verizon. Went down to $25 a month. Yeah, no, for sure. I agree, TD. Again, they're scammy. They're misleading. They lock people into long-term terrible contracts. They're just scamming people, bro. They're selling their data. They're doing every bad thing a company can do. And again, like, I think some dividend investors get talked into buying some high dividend. Like AT&T, doesn't it pay a high divvy? AT&T pays out, 6.6% annual dividend yield. You know, so it pays out a high dividend. But again, like, people have to understand, they're paying out this high divvy because they are dropping such a huge percentage year to year that, you know, again, they have dropped 50%. They've dropped 50% since 2020. 50% down since 2020. You know. Right, 100% DJ. Hey, what you doing? Huh? Okay, yeah, you can close it. Rosie was in here, that's why it's open. Close it. Yeah, there you go. All right, chat. GDP data. Get ready. Why doesn't someone get smart and make a live TV streaming services where you pick your own channels and charge $2.50 to $5 a channel? Because you can pay right now $60 for 40 channels. It makes no sense to do that. I'm curious how many people are first timers here. Verizon lost Fios and their customers to AOL. What's the effect of GDP to the market, stock, or crypto? GDP will influence the market a good bit. Now, how much we don't know. It depends on what the data. But yeah. You got a $3.97 put option. I mean, that seems kind of risky considering how much Meta is down already. No, priced in. You know, like, I understand that. I mean, again, I think you got to look at extension for Meta and see, like, Meta's down a bunch already, brother. You know, I think the likelihood that it's going to come all the way back down to under 399 is pretty low. But I mean, anything can happen. You might be right. I don't know. Yeah, I mean, straight, they already have that. If you look at like Fubo, or if you look at Sling TV, or if you look at Hulu, you do pick your own channels. You say, hey, I want these sports channels. I want the National Geographic channels. I want, you know, these movie channels, right? So you do pick your channels in that way. Yeah. Yeah, so tech is down pretty big on this earnings call, or on this earnings season. But we still got time, guys. We got an hour left. We got about 500 people here. I don't know how gold will react if it comes in as expected. Nobody does. That's something like, that's kind of like saying, hey, if the number's neutral, what happens? Nobody knows. Anybody that tells you they know is just straight up lying to you to try to sell you a mentorship program or a course. All right, guys. So, sitting tight. GDP data might do something. Is that really him on the right side pawn? No, dude. Is that really him? I mean, it looks like he just got a tan, grew a beard, and let his hair grow out. Did he get a perm? Now, is he wearing a chain? Is Mark wearing a chain now? Not Mark Wahlberg, Mark Z. Is he wearing a chain now? Look, my guy started doing MMA, and he started doing BJJ, and now he's all cool. I rolled with somebody that was wearing a big old chain the other day. I'm sitting there like, bro, my hand better not get caught in that big old chain, dude. I tapped a black belt the other day, too. I'm really excited about it. I'm not going to say who it was. Honestly, really good coach. Really good coach. Really good guy. Right? He's the one that taught me a lot. And he's the one, I think I got better rolling. Because I always try to roll after class. When everybody leaves, I'm always like, hey, does anybody want to catch another roll? And coach, who's like this older guy, he's like 50 something. He's always like, sure. You know, I like no-gi, though. So no-gi's kind of my game. But, like, I've been getting really good at, like, guillotines, darces, anaconda chokes, and arm-in, or arm-out guillotines is what I've really been getting good at. I think it's an arm-out guillotine. It's hard to explain. So, I shoot for a guillotine. Lately, one of the things I've been doing a lot is that I shoot for a guillotine, right? Arm-in guillotine. And then when they roll out to side control, which is the right defense for a guillotine, is, like, moving to side control, like, passing the guard is, like, getting out of the guillotine. I immediately transition to an arm-out guillotine. And so I go from this to this to like lock up my hands together and catch the neck. Like, it's hard to explain. And that's what I caught him with. So I transitioned to the arm-out guillotine and I locked it in really tight. And apparently he tapped, but like I didn't feel him tap. And to be honest, to be fair, I didn't think I would be able to tap him because he's so difficult to tap. I've never tapped him before. But apparently he got like nervous and started to like yell, tap, 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 you know. And so, and he was kind of upset at first, but then he calmed down and he was like, hey, good job, you know. My theory is that I'm a white belt, so he didn't want to tap to me. And so he let it go a little bit too long and almost went out. And so afterwards he was kind of nervous about almost going out, so he kind of yelled and got upset. But anyways, if he did tap, I didn't feel it, but I was in the transition, so. Oh, he definitely tapped. He verbally tapped is what he did. But to be fair, he certainly tapped. But he might have been letting me work and kind of, you know. But I don't know. I'm happy about it. I'm bragging about it. I'm excited. It's the highest belt I've ever tapped. You know. Can you tell us how to interpret the GDP data? I mean, the question you have to ask is, does the market still fear inflation in a big way to where they don't want economic growth? You know, that's the real question. Does the market still want economic growth? If they don't, if the market fears inflation, they don't want economic growth. If the market wants rate cuts, they don't want economic growth, right? Because one of the things that'll push the expectation of a rate cut back is if GDP data comes in stronger than expected. Well, working on the old guys. Nah, dude, this dude's like a 5th level black belt. He is, he's tough. Yeah, no, for sure. He was nice about it. Everything was fine afterwards. All right, chat. Boeing at 164s. Chat, is ninjutsu a real thing, guys? I'm looking it up. It looks to be. I mean, Aikido's total nonsense, right? And I see it implements Aikido. Aikido's total crap, It doesn't do anything. You got Steven Seagal out here putting on a, never mind. Never mind. Aikido's the pyramid scheme of martial arts. You just had bad service, my guy. AT&T is just for the divvies because it's a high cap. Yeah, I mean, listen, no offense, Jeffrey. It's all good, brother. I think you're trying to justify investing in it. I think when you look at the outlook for AT&T, it's a risky bet, personally. Again, this is just me. Maybe I'm wrong. Regardless of my customer service experience, right? Which was, again, terrible. But to be honest, when you compare them with Comcast, with whomever, they're all pretty similar in that way, right? They all treat you that way. They all say, hey, it's fine. They lie to you about your rates. They bump it up without telling you. They never will admit they were wrong or they lied. Like, they lock you into terrible long-term contracts and make you pay to get out of them. Like, that's their MO, right? That's AT&T, Comcast, all of them, really. The problem with AT&T, outside of just being terrible in that regard, which is, again, it's not just them, though, it's all of them. The real problem with them is losing business over time. I think they're going to be obsolete. People use streaming services much heavier now than conventional cable, than direct TV, than any of that stuff. People are just gravitating towards streaming services. Again, Netflix, Amazon Prime. Like, if you get Netflix, Amazon Prime, and Hulu, you're going to get exactly what you get on direct TV for a quarter of the cost, right? And so that's bad for them over time, right? Same thing with phone carriers, right? Now there's a lot of discount carriers. There's month to month. You don't have to get locked into a long-term contract with them anymore. So that's bad as well. I just think whichever way you look at AT&T, it's a bad investment. I think long-term it's risky. I think it'll most likely go out of business eventually, but I think it'll probably still be around, kind of like BB, kind of like BlackBerry, right? BlackBerry's still around. It's not really doing anything that people know of. It's $2-3 a share. I think AT&T is going to be similar. Yeah, I'm feeling better. Bro, Steven Seagal would get beat up by me. I would beat up Steven Seagal. Especially right now. Maybe not 20 years ago, but right now Steven Seagal is getting beat up. Like, I get people grew up in the 80s and liked his movies, but like, research Steven Seagal, Yeah, those arm out guillotines worked, Eric. Again, one of my, everybody at my gym kind of knows I shoot for guillotines. I'm kind of like the guillotine person that everybody knows. I guillotine people. But because of that, it's been harder to catch people. Unless they're new. Free Roll Fridays, I catch people because they're new and they're trying out the gym. And, if they ask me what belt I am, I'm like, hey, I'm a white belt. And so, kind of lull them to sleep in that way. But, But no, so one of the problems is that I'll guillotine people and they'll get out of it, right? They'll move to side control, or they'll pass my guard, or sometimes they'll just post with their forehead off the ground and just let me tire out. Again, the way I've been getting around that though now is to pivot to an arm out guillotine, either an arm out guillotine or a darce or an anaconda choke or something like that. That's what I've been doing a lot. I'm getting better. I'm still a white belt. Most blue belts will still destroy me. Purple belts certainly will, so, it's a journey. I'm having fun with it. Top 3 worst Aikido artists in the world. AT&T is OG. Yeah, so is Enron, so is BlackBerry, OG isn't always good. All right, chat. Hey, we got 40 minutes roughly, a little bit under 40 minutes left. Yeah, no. Again, if I'm being honest, I don't know if Steven Seagal would beat me up. He probably would. He's just a lot bigger than I am, I mean, I'm like 5'11", I'm like 170. So I'm not like a huge guy. I'm not small necessarily either. I'm kind of middle-sized. Average size, I guess. But I don't know. He's not going to beat me up with Aikido. If he beat me up, it would be from like karate or whatever he knows, which I'm sure he's a lot better than me at, Age does play a factor, though. Age certainly plays a factor. Tesla still. Let's see if Tesla can break 165. Tesla, I just want to see it over 200 again. Do you think Tesla will break 200 this year, chat? Right, exactly. Smart film, 100%. Normal people say you skinny. I mean, if you look at the BMI, I'm pretty average. I'm a little bit above average. I'm like 175, maybe. Again, I'm probably like 177 if I'm being honest. And so I'm actually a little bit above average weight for my height. I'm a little bit above average height wise, and I'm a little bit above average weight wise as well. Tesla 250 end of year. I don't know, man. I'll guess yes by the summer. Hey, we'll see. There's a really funny story about Steven Seagal pooping himself when he got into a fight with a real martial artist. Look it up on YouTube. It's good. It's hilarious. If Tesla gets a lot of people to bite on FSD at the new price. Yeah, I mean, I think August is going to be the real time to tell with Tesla. With robo-taxis, FSD, all that stuff. I think that'll be fun to watch, to see if it happens. I'm biting. Yeah. I think the problem with Aikido is this, right? I think the problem is like in the late 90s, early 2000s, and maybe earlier than that. You got a lot of Aikido schools sprouting up, right? And so, again, it's confirmation bias. Like, people have spent so much time learning this skill, right? This skill that they've spent so much time and energy. They're so desperate for it to be valid. They're so desperate for it to be real, right? It's kind of like if I went to a wizard school that taught me how to be a wizard, right? And I know I'm not really a wizard, but I've spent so much time and energy going to wizard school, top 3 wizards in the world right now, that I desperately want to believe it's true, Same thing with Aikido, And so I think there's a lot of people that have trained Aikido for years and years, and they're so desperate to believe it's real. But yeah, I did see that. That card honestly looks good, David. Conor McGregor versus Chandler, Jamal Hill versus who was he fighting? Yeah, versus Khalil. Which Khalil's looked like a beast lately too, man. I'm kind of rooting for Khalil, but. GDP data today. Jobless claims data today as well. We got about 30 minutes, chat. 600 people here live. If the robotaxi cybercab goes off without a hitch, I'll go ahead and predict 300 plus end of year. If it's delayed or problematic, 100 or lower. Yeah. Yeah, well, karate's legit. You know, you can look at like Lyoto Machida in the UFC and understand karate's legit. You know, even like Conor McGregor when he was young, right? When in his earlier fights, when he was knocking people out, he maintained a very karate-esque stance. Like his foot positions were very karate-like, were like really sideways. You know. So I mean, yeah, karate's legit for sure. Aikido's not karate though. Yeah, Wonder Boy, Thompson. Yeah. My favorite. What's your prediction for the data? I don't know. Again, I'm not really going to try to predict the data because I genuinely don't know what the data is going to show up as. GDP data expected at 3.5 or 2.5%. 2.5%. Jobless claims expected at 214. Yeah, Venom Page, dude. A lot of people didn't like the Venom Page fight that he had in the UFC. I thought it was great. I thought he looked great, man. I've always been a fan of him. I've been watching him for years. He's just really solid, really fun to watch. I wish he was in the UFC earlier, to be honest, because he's past his prime now, but he's still good. What do you think about gold now? I mean, gold's still looking pretty strong, I would say, over the last 20 days or so. Gold was at 21 something, 20 market days ago. Now it's at 23s. So, I mean, gold's still doing pretty well. I don't know what it's going to do from now on. I think gold has been one of the best long-term inflation hedges. So if you want to hedge against inflation long-term, you can invest in gold. All right, guys. Tesla at 162.40s. All right, so guys, we got 30 minutes left until the data drops. 30 minutes left. Market's kind of flat and choppy leading into this report. Again, tomorrow we have PCE data as well, chat. So PCE data tomorrow. Yeah, tomorrow is inflation data. Tomorrow is more important than today, Mikey. So today is jobless claims, unemployment. Yeah. Again, GDP data, jobless claims report coming out. Still got 30 minutes left, guys, until GDP jobless claims data. Well, it depends on what you define by miss, Smart. So Smart says if GDP data misses expectations, markets will fall hard. What do you think is a miss? You think coming in lower than expected? You think the market will react negatively with lower GDP? I'm not saying it won't. I think it's possible it does. But again, I think it's up in the air, and I think it could go either way, to be honest. Marco will trap us. Good equals bad. Bad equals good. Yeah, possibly. All right, guys, so we're at 418s here, chat. 418s on Meta. Do I want to add more to Meta? I don't think so. I think I'm just going to sit tight. It's not worth it. Again, we'll see if the GDP data is positive or negative. We do have jobless claims. All right, guys, we got 25 full minutes left. Still got over 600 plus people here live. We look crashy today. Yes, because somehow it will show inflation keeps rising and the cost of manufacturing produces keeps going higher. I don't think reaction will be severe given we are so close to PCE. Likelihood other major miss in forecast. I kind of agree, Jay. I think tomorrow's PCE data is much bigger, much more relevant. You know, I think tomorrow's GDP data is much more relevant. So PCE data, inflation data, just a much bigger release. Who's Drake? Nowadays on earnings, will Meta keep going? Will Intel beat on earnings? When is Intel earnings? I'm in Intel right now. I bought it a couple days ago, and it's down a lot. Yeah, I mean, I don't think he's talking about me because I don't really have pictures of my cars or anything like that on social media. Intel will be faced out of China market. Yeah, again, Intel's been kind of flat. Intel's been one of the companies that's going to benefit the most from the CHIPS Act. They're going to get most of the money. Them and I think Micron. Right, exactly, Jay. Disclosures are delayed. All right, Chad, we still got 20 plus minutes left. GDP data and jobless claims data coming out. Well, that's most chips, though, Stoops. Yeah, I think just for risk management purposes, I'm gonna cut a little bit of this meta trade. I just think it's too risky to hold, so I'm gonna cut most of it, or I'm gonna cut half of it. Just too risky to hold. We lost a little bit, but not a ton, to be honest. We lost like $100 or a few, like $150. Could have been worse. What is GDP and how does it influence the S&P? GDP is the gross domestic product. Just look it up. It's the amount of spending that the country's doing is what GDP is. Yeah, it's very relevant data, to be honest. All right, chat. We still got plus 20 minutes left. GDP data dropping soon. Again, we'll see what happens. We're right in the middle of earnings season. Today we had American Airline earnings. In 20 minutes we got jobless claims and GDP data coming out tomorrow. This is a big boy though. GDP's never been a huge like the market might move to it. PCE is a much bigger, much more relevant release here, to be honest. So still got 20 minutes plus. Yeah, somebody said they found my house, my car, like all this different stuff. Like, it's very weird because I don't post my house or my car on social media. I'm not really a big bragger on social media, you know? Like, I trust me, I could. I kind of keep it the same as YouTube, where I don't really... I have a nice house, but I'm not about to show it off. I have a nice car, I'm not about to show it off. And so, you know, in that regard, you know... PCE Friday. Yeah, PCE is the biggest report this week, without question. Outside of maybe like earnings, Tesla earnings. Yeah, dude. Again, people don't think I'm telling the truth when I tell them like you get weird, like obsessive stalkers. Like most of the time, again, one of them looks to be like really kind of roided out, for lack of a better word, and he's like really obsessive and kind of weird, and like sometimes those hormones will mess with your head, man. And then other ones just kind of like, I don't know if they want to be my friend or like what it is, but it's an uncomfortable situation, to be honest. It feels weird, man. It feels off. Very strange feeling. Definitely top 3 worst house owners in the world right now. My house is made of carbon fiber. Not so boring, you know. It's got 3 turbos. You know, it's pure carbon fiber. You know, it's a mix of a shipping container home, you know, mixed with a tiny home, mixed with a mansion. Okay. Cheers to you guys. My car is made of mostly wood. First of its kind. Anyways, gold pulling back a little bit the last 3 days here, chat. Consequences with being in the public eye, bro. Yeah, I know, man. Garcia looked good, bro. Again, people acting like Garcia didn't do that, man, but he of course did. Haney, I mean, I think people get so behind these fighters and emotionally wrapped into these fighters that they ignore the truth, which is that Haney got beat up, realistically. Hey, guys, we got 20 minutes left. Let's see what happens. Tesla did bounce right at that previous closing price. Joey, we all know it's really you, bro. We all know it's really you, brother. Don't lie. We know it's you. Yeah, one-time used car. That's all right. That's where the energy comes from. I'm sorry to hear that, kid. What's your opinion on the jobless claims data? Jobless claims data is interesting. You know, higher jobless claims data means more people are filing for unemployment, right? So more people filing for unemployment, higher unemployment is what higher jobless claims data signals. The question is, what does the market want? You know, conventionally, obviously, the market wants less jobless claims, lower unemployment. But in an inflation-fearing market, it can and has been the opposite historically, especially over the last like 6 months to a year. The question is, what does the market fear still? If the market really wants rate cuts, it does not want economic growth. You know, if the market really wants rate cuts, it wants higher jobless claims and lower GDP, because those are things that will make the Fed cut rates earlier than expected. So it's super nuanced. We'll have to wait and see, but that's the way I'm looking at it. What's your opinion on the jobless claims data? I think it's interesting. Again, we'll see. Too bad Muay Thai isn't as big as the others. Muay Thai is pretty big now. I think it's, Muay Thai is mostly an offensive martial art versus like, boxing, which is defensive in nature in some ways. You know what I mean? It just depends on what it is. Or karate, All right, chat. What's your predictions for GDP data? We got 15 minutes left for GDP data. Got about 800 people here live. Tesla ripping up to 163, testing the highs of the day here. Dumb question. If I buy a put option and the stock sinks in the aftermarket, does that mean I'm automatically in profit when it opens? I'm not going to call it a dumb question, but it's a very vague question. That's like me saying, hey, if Jerome Powell steps outside and bumps his third toe to the left on his right foot tomorrow morning at 7 a.m., which way does the Apple stock close at the closing bell tomorrow? I don't know. In general, it depends on what again, the options market is very metric heavy. Like, there's a lot of data that you want to look at for each options contract. So in that specific situation, the only real answer is it depends. It depends on what your strike price is. It depends on a lot of different things, what the deltas are, what the Greeks are in that situation. So again, it's all good, but yeah, it depends. It really depends on what the Greeks are. Look up the Greeks and try to understand them. I'm not sure. I'm not the options guy you want to go to. Depends on the pre-market and IV crush. Yeah. Again, I'm not the options guy. Sorry, brother. All right, guys, 14 minutes. Yeah, all good, Jay. No worries, bro. Top 3 options guys in the world right now. Days to expiry also gets involved. Yeah, because you're going to have time decay as well in options. There's just a lot of nuance. There's not nuance. I say nuance too much. There's a lot of unknowns there. So. All right, chat. 13 minutes. 13 minutes left. All right, Chad, again, we got a little bit over 10 minutes left. The SPY testing the lows of the day here, right around 502s. I think 500 is a pretty big psych level, a big psychological level. All right, so again, SPY bouncing back up. Meta's still at 418 here, chat. 418s. How would GDP affect the Dixie? I'm not sure. It could go a lot of different ways. It depends on how it affects the broad market in general. Hey, John, want to be more successful on YouTube? I mean, look, people can argue whatever they want. I'm content with the success we currently have. Again, I get about, I get between 250,000 and 500,000 views every month. We're very happy with the views. I mean, we got 1,000 people here, and people can act like 1,000 people isn't a lot. Like, what y'all have to understand is, like, there's a lot of networks out there, and they have like 20 people working for them. Like, this is just me, it's just big me, so it's just me here. I keep 100% of the profits from this channel. I don't have to share the profits with anybody outside of paying like pawn and contractors and stuff like that. But yeah. So when you consider that, we do very well. But I agree in general that sensationalizing things makes it. Again, you got a lot of other YouTubers that they legit tell you a market crash is about to happen every other week, and then they're wrong a lot, and so they justify it by manipulation or whatever they want to say, and then they continue to do that over and over again. A lot of them have been doing it for years, and some of the public just buys it hook, line, and sinker because it's kind of confirmation of what they want to happen, and they just kind of keep on buying it. They get more views. Again, they're just kind of milking views from you all, to be honest. Yeah, no, it's all good. Yeah, so pay. You recognized it. What did y'all think about Drake's response to that? I liked his first response. I don't know about the one with Tupac and Snoop in it. I don't know about that one, but Meta started bounce back. It's at 419s. And when they're right, they go back to it and say, I told you, didn't I say what happened? 100%. And really, they've called it. Again, the famous Michael Burry quote is that he's called 20 of the last 3 market crashes. It's the same thing with some of these guys on freaking YouTube, man. They're out here just, again, they get more clicks and views when they tell you the market's going to crash, but they're just kind of manipulating you. I'd rather just be honest with people. I'd rather just tell people the truth, which is that crashes are rare, and most of the people out here on YouTube predicting market crashes have been wrong over and over and over and over again, and they just kind of pretend they haven't been to keep their credibility. A lot of people that enter the markets, they don't really understand how rare crashes are, and they watch movies like The Big Short and Margin Call and like all these different movies, and they want to be the next guy to do it, right? But because of that bias in their head, they overpredict crashes. A lot of guys on this YouTube stream have been predicting crashes since, all the way back since, really all the way back since like 2022, when the SPY was at 360s. And so like, even if we do crash right now, we're still probably not going to go under 360s. And so, they were still, even if we do crash now, they're still wrong. And I think that's important for people to understand. Anyways, Meta bouncing back, Tesla bouncing back. SPY hit this low of the day here and bounced directly off of it. Again, kind of choppy range. I heard somebody else say we might have choppiness today because of PCE data tomorrow, and I tend to agree with that as well. We also have earnings this evening. The valuations for what, Nick? Do you think Nvidia is overpriced right now? You know? Do you think Nvidia has moved up too much in the last year? Genuine question. We could talk about it. Next week's pretty busy. Next week we got non-farm payrolls, unemployment data, and a bunch of other big earnings too. All right, chat. We got 5 minutes here. We got about 1,100 people here live. I guess Meta at 420s or so. Yeah, so the Fed interest rate decisions next Wednesday as well. So next week I would argue is busier than this week, although maybe with the earnings this week, we'll see. Yeah, I'm going to let GDP data come out, and then we can talk about whether Nvidia and other stocks are extended. 5 years is a lot for 10K. Not so boring. I don't think so, man. Maybe. I mean, who knows? But I don't know. I think that's too much, personally. Jobs is good because overemployment. You're right. I mean, I think jobs are strong. Labor market's been strong right now. Again, that's why like people say we're in a recession. Of course we're not. Again, people don't know what a recession is, and they just know a recession's bad. And again, I'm not saying everything's all rosy right now, but we're not in a recession. We're not in a depression. Really we're in the opposite. Inflation's a problem. Inflation's the enemy right now. All right, chat, 3 minutes. Three minutes, chat. Get your last minute predictions here. All right, chat. Well, the first thing is that Nvidia has a bigger float. AMD has a smaller float, you know. What's your last minute predictions, chat? We got 2 minutes. Again, PCE data expected tomorrow at 2.6%. Last time it came in at 2.8. Jobless claims expected at 214. GDP expected at 2.5%. I'm sorry, guys. Let me put this up. I forgot to put this up. Here's the GDP data breakdown. We got about 1,300 people here live. Here's the SPY. Here's Meta. Here's Tesla. I'm going to put Nvidia up. .2% GDP. I think that's way too high. I think jobless claims are too high as well. Both of those things are kind of neutral ASOP. So 220 would be signaling less economic growth, and GDP data would be higher economic growth. So those are kind of like mixed signals there. I mean, I'm not saying you're wrong. That could happen. I think they're a little bit too big of beats there. I think both of them are too high. But maybe not. I don't know. We'll see. All right, guys, we got a minute and a half left. About a minute and 10 seconds, really. All right, guys, here we go. 1 minute. .30 seconds here, chat. All right, let's do this. Again, GDP expected at 2.5. Jobless claims expected at 214. Hit the live button next to the play button. We're going to throw it in sub-only mode as well here. So we're in sub-only mode now. So subscribe if you haven't yet. And here's the release, chat. 5 seconds. And here we go. Jobless claims came in at 207, way lower than expected, signaling economic growth. 207 for jobless claims numbers. GDP still hasn't released yet, but jobless claims came in at 207 versus 214,000, lower than expected. GDP data is out. It came in at 1.6%. 1.6%, and initially the market has reacted positively to 1.6% GDP data, so GDP data came in noticeably lower than expected, which might mean earlier rate cuts, to be honest. Market is reacting negatively to this, which is interesting. Because again, I think this will mean rate cuts sooner than expected. Again, jobless claims came in at 207 versus... Jobless claims came in at 207 versus 214 expected. GDP data came in at 1.6 versus 2.4%. Remember, we got PCE data tomorrow too. A big report, a big release. This will probably drop markets, but... Again, I don't think this is necessarily bad for GDP to come in low. I think this is kind of what the market wants. The market wants rate cuts. I think this will signal rate cuts earlier than expected. I think if you watch the rate cut expectation, it's going to be higher than it might move up on this report. And this isn't really a huge reaction either. But again, GDP data again came in noticeably lower than expected. I mean, this isn't a crash. The SPY dropping from 502 to 501 is a 0.25% drop, 0.2% drop. So far, it ain't a crash. We'll see. We'll see if 500 can hold. But the question is, what does the market want? Does the market want this or not? Again, if the market fears inflation, this GDP coming in low is good, in all honesty. It's kind of mixed reports as well, because again, jobless claims signaled more economic growth. Basically, less people filing for unemployment with jobless claims. GDP signals less spending overall. Noticeably less spending than expected. So the question is, what does the market want? If the market fears inflation, this is probably good and optimistic for the market. It means less people filing for unemployment, but also less spending in general, right? Which is going to do more to combat inflation over time. So it's an interesting report for sure. The question is, does this signal earlier rate cuts than expected? I don't know. No, I don't think this is recession fears. We would have to have negative GDP for recession fears, and it would have to happen 2 quarters in a row for 6 months straight. And I don't know if we're there yet. Again, and I'll be the first to tell you if we are, but technically we're not there yet. We'll have to wait. Yeah, I mean, Connor, this dip right here is from GDP data 100%. Like, GDP data, jobless claims data came out exactly when this big drop happened, brother. So, like, look. This came out right at 8:30. I'm not saying you're wrong. I'm just saying this specific big candles, these big red candles here came out because GDP came in at 1.6 versus 2.4%. Yeah, again, I think this is definitely going to make more people fear a recession and depression, 100%. It's going to make people fear inflation less and make people fear recession and depressions more. And again, if you haven't already, check out my sponsors. First one is Apex. Apex is a funded account program where, listen, guys, I'm here to tell you, almost all day traders lose money. It doesn't matter what they say, who you follow. Most day traders are going to lose money. Now, you can either put up thousands of dollars when you're learning or when you're trying to get build profits. You can even put up thousands of dollars and, again, probably lose thousands of dollars. Or you can limit your risk in what's called a funded account program in futures. Again, most pro day traders actually trade futures. And what Apex does is they give you a demo and they test your skill. The base one's 25K. You can see they have static accounts where there's no trailing drawdown. It's just a regular drawdown. They have $250,000, $300,000 accounts. So many different options to choose from. And the base one is only about $30 if you use my discount right now. It's about $30 if you use coupon code BT, beginner trading. And again, this is great because it limits your risk when you're learning how to day trade, or if you don't have that much money, your risk is limited. You're not risking thousands of dollars. If you lose, you're only out $30. It's not the end of the world. But if you pass this test, and they're going to give you a 25K demo, you got to make $1,500 in profit without losing $1,500 and following their rules. If you could pass that test, they fund you 25K with a 90% split, and they've paid out over $100 million to their traders. They're one of the most legit in the world. They paid out over $25 million last month. Again, so you got limited risk. Your risk is much less than putting the money up yourself and losing that. But the reward is similar. You're still keeping 90%. You get to keep your first 25K in profit. Again, a great community, a great resource. And again, in the futures market, you can day trade the S&P, the NASDAQ, basically the SPY price action, basically the QQQ price action in futures. Gold patterns are very similar to blue chips, but there's no PDT rule. Great way to learn how to day trade. There's the link if you want to check it out. Use promo code BT. Although, again, chat, before we look at this, they are a sponsor of mine. I'm definitely biased because they pay me money. I'm biased in their favor. They pay me money. Check it out. There's the link. Also, understand CFTC 4.41 and all this good stuff here, chat. Again, the SPY is bouncing back here. The SPY is bouncing back. Look at that. It's at 501s right now. Yeah, it's all good, Connor. Again, all I'm saying, bro, I'm not saying your indicators or signals are wrong. What I'm just saying is that this specific move right here, bro, is 100% from GDP data, dude. Again, it happened at 8:30. You can see the volume increase, right? That's not a technical move right there. That's 100% a fundamental economic release, brother. The market's reacting to lower GDP, right? So lower GDP made the market drop. They're fearing recessions and depressions, and so the market's dropping from it. As for the other indicators, I'm not even disagreeing with you. It's all good, bro. It's all love here, man. All I'm trying to say is, like, this specific move right here is 100% from GDP and jobless claims. So I think you could trade some weekends. Asking about Apex. All right, guys, so we are getting a bounce back. Let's see if the market holds. I think $500 is a big milestone level. Yeah, I mean, sometimes with the way that's described, not so boring. He says, "Hey, John, I'm the worst trader in the world," but sometimes news comes out, good or bad. They usually sell out of fear, and then people buy it up. The first move sometimes is the wrong move, is what it's described at. Again, though, I'm kind of a purist. TA's different for everybody, and so again, it's not like everybody's different. But again, though, I mean, people have to understand this truth, right? Which is that fundamental economic releases are going to trump most technicals. Like, you can have the best technical pattern ever, but if you got CPI coming in low or GDP coming in with like much lower than expected and the market doesn't like that, it's going to trump any technical pattern short term, right? Now, long-term technicals might play out, extension might play out, but, you can't just look at technicals, especially when it comes to economic releases. Now, the market might do whatever, but, again, the likelihood that this move right here, that happened exactly at 8:30 when GDP data, when jobless claims data came out, you can see the volume increase precisely at 8:30, right? Like, if I get rid of this, you can see the volume increase precisely at 8:30. The likelihood that move is a technical move is incredibly low. Like, that would have to be the luckiest volume percentage move. Typically what you see with technicals is you don't see big volume spikes like this with technicals. You might see movement, but it's not technical movement, it's fundamental releases affecting the market, and then technicals can play out. But I guess the way to put it is, like, if you see big spikes in price and volume short term, it's almost never a technical move. It's almost always a fundamental release of some sort, like economics data, earnings, like whatever. And again, it's all good, it's all love here. But let me put the GDP data back on screen. Yeah, so futures open at 6 p.m. on Sunday. So I think they're closed Saturday, but I think they're open on Sunday. I don't really trade Sunday, though. The inflation recession combo. Yeah. I mean, honestly, it's interesting. I think this is a $500 level, big milestone technical level for sure. So Rhythmic is a software-based, so you could use Rhythmic logins to use Quant Tower, to use NinjaTrader, to use other software platforms. Tradeovate is a web-based platform. So basically, if you want to download a software like Quant Tower, like what I'm using when I trade, when I day trade, or NinjaTrader, you want to use Rhythmic. If you want to use a web-based platform where you just kind of log in on a website, that's what Tradeovate is, and you can use the Tradeovate option. It's purely up to you, Right, but that's exactly what I mean, Alec. I mean, the fundamental releases are triggering. I mean, you can call the numbers of buys and sells orders technical, and that's fine. But what I'm saying is the volume surges in because of the fundamental releases. And by the way you describe it, Alec, everything would be technical. And that might be true, right? But it's influenced by fundamental releases, and that's what's influencing this here, like this move right here is 100% a fundamental release. It's again, the likelihood that this specifically is from a technical move that just so happened to come out, and it just so happened to come out when GDP data and jobless claims data were released exactly at the same time, is so low. It's so low. PCE release, yeah, but that's not really super big. So PCE tomorrow is the big one. The whatever PCE release you see there, Mikey, is not the big one that we're watching. So again, I know today we had PCE prices today, but that's not a very important one. The big one tomorrow is core PCE index, which is the core personal consumption expenditure data. It's inflation data, And again, the reason I know this, anybody that watches this stream regularly knows that we cover this data. We cover GDP, we cover economic reports, we cover jobless claims, we cover PCE, we cover CPI, FOMC meetings, and so we watch these moves happen at 8:30 every day. Like, these are 100% the 8:30 economic reports coming out and influencing the market up or down. And so again, we'll see if it holds. Nvidia's dumped under $800, under $800. So we'll see if it holds. Super low unemployment yet super low GDP. Yeah. Interesting. Again, so far the market has reacted negatively to it. Again, we'll see if we get a continuation of this move now. I'm close to passing the demo. What do I do next? Oh, I mean, look it up. Generally, you wait till you hit the profit target, and after the closing bell, they'll send you your login if you pass it to the other account. Yeah, so we're sitting here tight. We still got about 45 minutes until the market opens. Chat. Again, we also have Google and Microsoft earnings today. We'll try to cover both of them too. Yeah, the other thing to understand, chat, is like the market is mostly reacting negatively to not just economic reports, but to earnings as well. Meta earnings market really reacted negatively to it. Tesla earnings, the market actually reacted somewhat positively, but Meta earnings caused Meta to drop from 500 down to 415. You know, so a very big percentage drop in that regard, basically almost a 20% drop, and it did drop 20% down to 399s from 500, but bounced back a little bit. It's at 415s now, but yeah, Meta's down essentially 20%. We were in a larger position. We sold most of it. The numbers were much lower than expected for GDP and causing the market to dump, which is interesting. I thought the market might want lower GDP, but it looks like the market fears recessions now. You can see the PCE PCE data here tomorrow. Today was GDP, not PCE. Gold. I'm looking at gold. Gold from this report. And look at Nvidia down to 387. Gold is actually up from this report, which is interesting. So I guess gold is that inflation hedge that people are running to. So gold is actually gapping up some. You need to break down part-time, full-time most of the time. Most of those that are late are working gig jobs or so part-time. Yeah, I know. Most people are working a lot of people working part-time, and inflation's so high that people have to work. And so it's not necessarily a good thing that the labor market is strong. Microsoft will plug the drain and fill the tub. We'll see. We'll stream it. Thoughts on Apple getting over 170 this week? Yeah, bonds are going to be up because the equities are down. Typically, they move inversely with bonds or with markets. I think GDP wasn't the cause. Check the trading economics. Yeah, but again, Prime, you're looking at the wrong PCE, dude. So again, PCE tomorrow is the big one. Today's GDP. Like if you look at the relevance of these economic reports, right? The PCE prices is, a 1-star economic report, meaning it's not a very influential report, right? If you look at multiple star reports, those are the big ones. And that is today's jobless claims numbers and then GDP quarter over quarter today. So quarter over quarter, we're at 1.6%. Again, we're not near a recession, but it's certainly lower, signaling less economic growth there. But again, I think that's kind of what the Fed wants. What I think this means is that the Fed will be more likely to cut rates earlier, is what I think here. Again, I might be wrong, but I think this means the Fed will be more likely to cut rates earlier. And if we look at this data, chat, let me look at the CME watch tool. In May, they're expecting 0.3% chance of a rate hike. So they're expecting a rate hike in May, or a 0.3% chance of a rate hike. Still almost certainly a pause. June, another pause, although you got a 14% chance of a cut. July, still a pause, although you got a 33% chance of a cut. September is when most people think we're going to cut still. But I think this number might go up. Gold's still ripping up, breaking highs here, so gold looks really good. Fed is always late. They wait till some of the yeah, so the 10-year yield currently sitting .7%. So bonds are spiking. Look at the bonds right now. Look at bonds spiking. So 10-year yield up to 4.7%. I think this will signal earlier rate cuts than expected. Yeah, Demetrius, I don't think that's a bad decision, bro. Like, long term's the big edge. Yeah, but I mean, again, I think you're wrong, Prime cut. Like, you have to look it up, bro. Look it up. So, again, if interest rates go down, bond prices actually go up, right? So things that would signal for interest rates to go down would be GDP coming in much lower than expected, right? GDP data coming in much lower than expected means what? It means the Fed might cut rates earlier than expected, bringing interest rates down, right? When interest rates go down, bond prices go up, sir. And that's exactly what happened. If you look at 10-year bonds right now, they're at 4.7%. And so you're wrong. You actually have it backwards. No offense. You know. John, would you go long on a video like 1 year at least? I don't know. Long term, I think it's fine. But short term, I think it could vary. Why would Fed cut rates when inflation is up? I'm not saying they will. I'm saying that this makes it more likely that they're going to. Again, GDP coming in low means the Fed's more likely to cut rates because, again, right now they're in a period of QT, their quantitative tightening phase. They are trying to keep interest rates high to discourage spending and push the economy down, and that's the result that they're getting is GDP coming in lower than expected. And to a certain extent, this is what they want, right? They want interest rates to stay high. They want people to stop spending as much because when people stop spending, what's the consequence of it? Inflation goes down. And so they're trying to push the economy down in that regard, and they have been. They're in a period of QT. What is QT? QT is quantitative tightening. It means that the Fed is not expanding their balance sheet anymore. You know, instead they are allowing their current bond holdings to mature and expire and run off. What this does is this makes it so that banks keep interest rates high, right? That's what they're trying to do. Is they're trying to keep interest rates high because interest rates high discourage spending. Discouraging spending means inflation gets better. And so, yeah. Now, inflation data is ultimately going to be the influence over whether they do decide to cut rates. But again, GDP coming in low does signal less of a need for rate cuts. If GDP data came in really, really high, like, so imagine it like this, right? If GDP data showed a thriving, like, super hot economy, right? If GDP data showed a thriving, super hot economy, what's the consequence of a hot economy? People spend. When people spend, what happens? Prices go up. And so if the Fed wants prices to go down, what do? They keep interest rates high. They do it through QT, which is what we're currently in. We're still in QT. They also do it through rate hikes, which is what we've seen over the last few years, and they're pausing rates now. All of these things keep interest rates high. If you look at mortgage rates are at what, 8% right now? Because the Fed's doing these things to keep interest rates high. One of the things that signals less of that is GDP coming in low. Right? Because this could signal lower inflation problems. And again, we'll have to wait and see. It's not going to happen immediately. Look right below me in big letters here if you're wondering if jobless claims data is coming out. All right, so again, Yair, bond prices go up when interest rates go down. Okay, bond prices 100% go up when interest rates go down or when potential interest rates are going down. All right, they do this because bonds pay fixed interest, specifically fixed interest that becomes more attractive when rates go down. Okay, driving up demand and the price of the bond. All right, and again, you can look it up on Investopedia, you can look it up on wherever, right? On the opposite end of that spectrum, if interest rates go up, right? If interest rates go up, investors are no longer going to prefer lower fixed interest rates paid by the bond, and so that's going to result in a decline in the price. All right, so things that would signal lower rates will make bond prices spike, and again, it's not hard to prove this. Again, GDP data coming in low signals more likelihood of a rate cut, right? More likelihood of a rate cut signals what? Lower interest rates and the 10-year spiking on the right, you know? Well, I mean, look it up, Prime. I mean, you can theorize about it. Just look it up, brother. The correlations between bonds and interest rates are very known, very well known. You know, look it up. Or actually, yeah, you might be right. Actually, I might be wrong. Sorry. I try to admit when I'm wrong. You might actually be right. I might actually be wrong. That you might actually be correct. I was dumb. You were smart. I was wrong. You were right. You are very good looking, and I am not attractive. I think I am wrong. I think I actually did get it mixed up. Hold on. Okay, yeah, you were right. Maybe the jobless claims affecting that. I don't know. Honestly, I'm still kind of sick. I'm not feeling 100%, and so I'm just gonna blame me being wrong on. Again, I'll have to look it up, dude. Honestly, there's so much nuance with bond prices. All I know is that GDP data came out, and market didn't like it. Came in much lower than expected, and what this does signal is this signals more likelihood of rate cuts. That is objectively true. You know, again, why does it signal more likelihood of a rate cut? As for bond prices, I don't know. But as for bond prices, I don't know. But I know what ultimately what this means economics wise is that this means more fearing of recessions and depressions. And what does the Fed do when the market fears recessions and depressions? You can see this by the market's reaction. The market reacted negatively to this. And so again, what does that mean? That means the market fears recession or depression. If GDP data comes in low and the market goes down, what does that mean? That means recession, depression risks are there. Or not risks. That means the market fears those things. I don't really think we're risking that yet. But it means that the Fed is probably going to be more likely to cut rates. Or more likely. I'm not saying it's likely or probable, but it's more probable and more likely than it was prior to this GDP data coming out low. That's 100% for sure. To entice buyers. Yeah, that makes sense. Right, you're right, Yair. Bonds are down, yields are up, even though GDP is low. That is correct. That's backwards. Sorry, my mistake was I was looking at the yield instead of the price of the bonds. But yeah, that's all good. You're right. All right, Chad, we got 30 minutes left. 3 weeks ago, the market would have loved lower GDP. Now it hates it. Yeah, I mean, it could be inflation related. You know, what did CPI show up last time at? And again, tomorrow's PCE data will be a big influence. What did CPI show up last time at? What was the expectation versus what it showed? When did CPI come out? I think it came out 2 weeks ago. Okay, so yeah, it rose 0.4% in March. Next one is May 15th. I have to go back, so let me look this up. So this was 410. So the last CPI report. Yeah, so CPI universally came in higher than expected last time, right? So that might be why the market pivoted. See, that wouldn't make sense either. That would signal more inflation problems, less likelihood of a rate cut, more likelihood of like a rate hike. You know, so now the market reacting in a good is good and bad is bad scenario. Yeah, it is kind of nonsensical, but that's the market sometimes, I guess. Yeah, so let me end this poll. Yeah, I hope we don't rate. I mean, I don't think a rate hike would necessarily be bad. Again, it's kind of like the thing to understand about economics, guys, is like the Fed. When you hear rate hike, rate cut, all these different things, what it really means is interest rates. What they're really influencing is interest rates. If spending is if spending is too high, right? If people are spending too much, think like post 2020, when everybody got stimulus checks, when interest rates were zero or almost zero. The consequence was too much spending and inflation spiked. That's not necessarily a good thing for inflation. And in that regard, a strong labor market is bad because it means more people spend. On the other side of that, if we're at recession or depression risks, what does that mean? That means that too little people are spending, and that means the Fed wants to lower interest rates to compensate for it, because when interest rates are lower, if you're paying less in a mortgage or auto loan or whatever, you're going to have more money to spend. And so you're going to spend it on other stuff, thus stimulating the economy. So those are the two ends of that. And so PCE data tomorrow will be really interesting, because sometimes the market reacts in a good as bad scenario, where like an example of this is over the last, I would say the last 2 years, good has been bad and bad has been good. Less economic growth has been interpreted by markets as a positive thing because of inflation fears. And the Fed will raise rates aggressively, but keeping rates high for too long causes what, chat? It causes risks. It causes too little spending. And what's the consequence of too little spending? Recessions and depressions. And so you got to understand the broad nature of economics. And so, yeah, right now what this GDP data showed is lower spending than expected, right? Which again, if we're still in that inflation fearing market, should have made the market go up. But jobless claims also had contradicted it, I guess, even though it's lagging. Jobless claims contradicted this data. What do I mean by that? I mean, jobless claims were lower than expected, signaling what? More people working, right? Now, I understand a lot of this is temporary, but yeah. We're going to do a poll, not really regarding PCE data, but we're going to ask people, is the market still fearing inflation? Yes or no? I think it's a good question to have. Look at NVIDIA dump here as well. Hello? Hi. All right, guys, so we're back. Yeah, I mean, we could be in a stagflation mindset. I see a couple people in chat talking about stagflation. If you don't know what stagflation is, right? Stagflation is fearing both. And I think that's really what this shows is the market's fearing both inflation and recession, depression risks. So the inflation rate is high still and increasing, but the economic growth rate slows. See, the problem with this, though, is that I don't know. Let me clarify. I don't think we're necessarily in stagflation. Why? Because unemployment's still under 4%. Unemployment's still very low. Unemployment came out last week, didn't it? And it showed lower than expected data, right? I think that's right. So unemployment is still low. It's still under 4%. Let me see. When did unemployment last come out? GDP data, PCE data tomorrow. Or maybe unemployment. I think unemployment actually might drop next week. I think next week payrolls and unemployment data comes out. Yeah, so unemployment drops next week. Last time it came in at 3.8%. So unemployment's still under 4%. And I know people are going to say lies, it's not real or whatever it is. I don't know. It's still low for the most part. Because I think people are working. I think jobless claims shows the same thing, right? Jobless claims shows what? Lower than expected, 207 versus 214. That's how many people are filing for unemployment week to week. So again, we'll see what PCE shows, right? But again, I mean, you also have to understand, people need to understand this though. 3% inflation is not bad, right? People acting like 3% is bad. Like CP or PCE is expected to show up tomorrow at what? It's expected to show up tomorrow at what? 2.6% is what core PCE is expected at. Are we really going to pretend that's bad? You know, are we really going to pretend that's super high? Because it's not. You know, objectively, it's not. You know, anything under 3% is pretty good for inflation. Now, I know the Fed has a 2% target, you know, but that's like me saying my target. That's like me saying, hey, I want to make $1 million a year. And then if I make $800,000 a year, people are like, nah, that's not that much. You know, of course it is. It's still good. You know, I guess is the point. Is it where the Fed wants it to be? No, but that's a goal. And sometimes goals aren't hit. But if we can get close to that, it's an optimistic sign. The other thing people have to understand is that inflation generally doesn't go down, it slows down, right? So if we could slow it to 2 to 3%, it's fine. No, I agree, Yair. I'm one of those people that think we need to wait and get inflation under control. I'm not saying it's perfect. I don't want us to cut rates super early. I would rather keep interest rates high because I think keeping interest rates high in turn make sure inflation is under control, because once inflation starts to get worse, it gets much worse and it can snowball and get worse much faster. So again, I'm not saying everything is perfect. What I'm saying right now is that inflation isn't crazy high. You know, again, you got to look at inflation 2-3 years ago. Inflation was at almost 9% 2 or 3 years ago. We're under 3% for PCE inflation, you know, and so I think that's okay. I don't think it's terrible. I get it. It's an election year. People want to act like the economy is just the worst it could ever be, and I get it. Most of that is political bias. Again, I'm neutral politically and all that, but yeah, listen, I know inflation is up a bunch in the last 4 or 5 years, but most of that has to do with the pandemic. You know, so again, like, if you want to know why inflation was high for a long time, is because 2020 happened. The Federal Reserve stepped in, and again, after 2020, the economy was at risk because, again, you had lockdowns, you had the pandemic, you had all these different things. And so the Fed stepped in and they brought interest rates down to almost zero. You know, super cheap loans, super low interest rates. This caused, and they also sent out stimulus checks. They did QE. They did a lot of things to contribute to inflation in 2020. You know, one of the consequences of all this stuff is prices spiking. Why? Because businesses can. People are spending so much. Rolex prices doubled. Like a lot of prices spiked. Groceries prices spiked. All these things happened. And so now the Fed, the consequence of that is inflation, and the Fed stepped in and they did the other side. They did QT. They did more restrictive monetary policy. They kept interest rates high, and we've been in high interest rates for a minute now. You know, I don't necessarily know when the Fed is going to choose to cut rates. I think the economy can be pushed out a little bit, and I think if you want, like, I think people are going to complain regardless. I think if interest rates are high, they're going to complain about that. right? And then if we bring interest rates down and inflation spikes, they're going to complain about that. And if they keep interest rates high and we're at a recession and depression risk, they're going to complain about that. And so I think no matter what happens, people are going to complain about it, and especially during that. This is especially true for election years, right? But again, as I always tell you guys, I don't know what's going to happen. No, I agree, Matt. I think they're probably going to cut rates before we get to 2%. I don't know if we're going to get to 2%. And so, yeah, I don't know if we're necessarily going to get it. But again, guys, you have to understand the nature of inflation, which is that inflation is not going to go down. Like, a lot of people are looking at the high prices and they're mad they're not going down, right? But listen, I hate to break it to you, but prices are very rarely going to go down. You know, it's just not, historically, that doesn't really happen. Like, the best that anybody can do, including the Fed, is that they can try to slow the price increases down. And again, they've effectively slowed it to 2.8% now. You know, but of course, if you take what prices were before the pandemic and correlate it with what it is now, of course, prices are much more expensive. But, you know, what are realistically, chat, what are we supposed to do about that? Genuine question, right? Like, genuine question. What are we supposed to do about that? I think the only thing the Fed can do is they can keep interest rates high, stop spending, try to stop spending. And that's what GDP data showed, was less spending, you know. Dixie climbing, yes, because the market is dropping overall. Is it time to buy the dip? I don't know. I'm not really buying it yet. I'm going to wait for PCE data to come out. But yeah, the Dixie is spiking. It tends to move inversely with equities. So if equities are going down, the Dixie's going to go up. Gold just went red on the day as well, chat. The Great Deflation, or the Great Sag, refers to the period between 1970 and 1870 and 90 in which the world prices of goods, materials. Yeah, but using an example that happened over a century ago is probably not the most realistic modern example shining bright. It's all good, brother, but yeah. Again, deflationary growth typically is going to be very difficult to achieve. And again, in what way do we achieve that? Like, the only way we're really going to achieve that is if we go into a recession or depression, right? And then when that happens, people are going to complain about that. And so, you know, again, people like to complain, but there's not really any solution here to like, the best we could hope for is to slow the rise of prices, you know. And that's what the Fed's trying to do. I'm not saying they're even good at it, but that's the best we could hope for. And so I think people have to adjust their explanations in that regard. A lot of people just kind of, if things are bad, they say we're in a recession or depression, and that's not necessarily true. Like, right now, things are bad not because of recession and depression risks, but because of too much spending and inflation, right, over the last 5 years, since the pandemic, 4 years. All right, guys, anyway, SPY at 498. Gold's still technically red. I'll be right back, guys. I gotta go check on my daughter real quick. I'll be right back. Or here, we'll watch the market. Does the market bounce back, chat? While I'm gone, it might take me like 30 seconds. Does the market rebound after lower than expected GDP today? 1.6% versus 2.4%. Does the market rebound, chat, after lower than expected GDP data today? Leave your answer in chat. I will be right back, guys. Leave your answer in chat. Does the market rebound after lower than expected GDP data today? Again, the GDP data showed 1.6% versus 2.4% expected here. You can see bonds spiking on the right side, yields, and yeah, I'll be right back. All right, we're back. Does the market rebound? Let me see what the chat says. Always expect the unexpected. It will dive. Probably. All right, chat, we got 9 minutes left. 9 minutes left. So tomorrow we are going to be doing a giveaway. We're going to be giving away 3 Apex accounts. Tomorrow. We got custom codes that we can give you for them. Yeah, so tomorrow we're going to be giving away three accounts. I don't know. I'm not really buying this dip yet. I'm waiting. All right, so Nvidia bouncing back up to 780s here. We've mostly been flat since we had this big pullback here. But again, I think when you zoom out and you look at the whole picture, it's not that, like, I think a pullback's necessary. I don't think we're going to sustain this big rise right here. I don't think that's a reasonable expectation. Again, tomorrow we're going to give away Apex accounts. If you don't know what Apex is a sponsor of mine. They are a funded account program where they give you a demo and they test your skill. If you could pass the test, they fund you. If you can't pass the test, again, you only lose what you pay for it, which the base one is $30. The top one, I think, is a couple hundred. But, you know, you don't need the top one. You can get one for $25K or whatever. And there's no PDT rule in futures. Patterns are very similar to blue chip stocks. There's just no PDT rule. You could day trade short, buy market, sell market. We're also going to get ready to day trade on Apex right now. Hopefully we get some good volatility here. But again, they give you a demo and they test your skill. If you pass the test on the demo, they fund you the same amount. So if you pass the base one, that's $30. They give you $25K in funding with a 90% split, and you also get to keep your first $25K in profit. But if you lose, you only lose what you pay for the challenge, which the base one's, again, $30. We're doing pretty well on Apex. We made a little bit of money yesterday. Here's my graph over the last 7 days. Pretty small gains. We're up about 450 or so in the last 7 days. We got a 7-to-1 win-loss ratio, so we're doing okay. I kind of want to short this trend here, and you can kind of see it's very similar to day trading stocks. We're going to take 3 contracts here. Very similar to day trading stocks. Again, no PDT in futures. I'm day trading essentially the QQQ price action, so I'm basically like shorting the Q right now in futures. And again, we're going to be giving away 3 of their accounts. If you want to check it out, here's the link. Use promo code BT to get you the max discount at all times. Although remember, they are a sponsor. I'm biased. They pay me money. And we'll end this. And again, so we're still in this position. We're flat. Oh, now we're green a little bit. Let's see if we... There we go. We'll give it a little time. $15 in profit. We're retracing all the way back up. Five minutes, chat. I'm going to cut this before the market open. I don't want to risk holding this through the opening bell. All right, there we go. All right, so we took half off, and then we retraced all the way back up to where we're kind of flat on the rest. I do not want to hold this through the opening bell, so I'm going to get ready to cut this if it doesn't. We got about 4.5 minutes left, but still. Alright, we're going to just take half of it off. I just don't know what else to do. I don't want to hold this forever, and I'm trying to get out before the opening bell, which in about 4 minutes. Yeah. We added a little bit to this, see if we can catch a nice little flush. I'm trying to be patient. There we go. I'm gonna go ahead and cut this. So we're up about 20 or something on the day. You can see how similar this is to day trading stocks. All right, so we are bouncing right back up here. We got the opening bell in 2 minutes, chat. You can trade the S&P 500 futures, NASDAQ futures, gold, a bunch of other stuff. Check their site. You can use the link in the description if you want. Again, if you want the max discount, just use my promo code BT. Okay, so yeah, so another fun fact is that the coupon codes that I'm going to give you for the discount, chat. So the coupon codes I'm going to give you for the free Apex account, you can use any size you want, which is really nice, honestly. See, this looks like a good short, but the market opens up in 45 seconds, so I don't want to mess with this. Just be here tomorrow, chat, if you want the discount. Tomorrow. The giveaways tomorrow for PCE data. Alright guys, here's the opening bell, 20 seconds. Ugh, I'm feeling better, but I'm still not 100%, man. Sucks. Alright, there's the opening bell. Ding, ding, ding. There's the opening bell, chat. We'll see what we get. NASDAQ is falling a little bit at the opening bell. Not enough to really be cause for a worry yet. Retracing back up. NVIDIA just popped up a little bit. Watching the SPY here, pretty close. I'm going to put 2 charts up here instead. There you go, that's better. Alright, look at NVIDIA. NVIDIA testing 790s. A little bit of bullish action at the open so far. Still early. That's 1 minute after the open, though. Oh yeah, Apple ripped. Hey, you love to see it. That's nice. NVIDIA now turning down. Alright, so something's turning down here. Again, we'll see if Microsoft and Google earnings can save the market today. They drop after the closing bell. Apple still looks pretty strong. I guess I'm going to go in and short this, but it's also kind of risky. We have a cushion on the day that we could play with, though, so we got 2 contracts. There we go. All right, we took half off, locked a little bit in. Took the rest off since it's the opening bell. We're up about 40 bucks. Again, we started to short. It looks like that was the right move so far, but we're already out. Oh wait, it's Google and Microsoft earnings today, by the way, chat. That's what it is. It's Google and Microsoft. We're short again. Kind of shorting the bottom here, though, so it's a little bit risky. I'll take 4 contracts here. All right, we took half off. Took another piece off. Go and get out the rest. So we're up about $70 already. Playing the range. Watching NVIDIA, though, if NVIDIA starts to bounce back, you know. I'm gonna buy this. I see Apple kind of retracing. Kind of risky though. Alright, so we took half off already. Gonna go ahead and cut the rest. Alright, we're up about 80 bucks now. Look at NVIDIA start to run, dragging the market back up. NVIDIA about to go green on the day. See if it pulls the rest of the tech up.
Yeah, I think there's a positive correlation with how new traders are and how often they think the market crashes or how bold they make their crash predictions. I don't think everybody that thinks the market's going to crash is new necessarily, but I do see a lot of new traders predicting market crashes. All right, Nvidia just tapped that previous closing price and then came right back down. Nvidia went all the way up there. Let's see if Nvidia holds the 200 EMA. Again, we're going to buy this dip. It's kind of a risky buy, though. We've been shorting the market all day. But we'll take a small position here. See if we get a longer term kind of range choppy play. It is a big earnings day, so we could have chop too. All right, so we're out of this. We're up $100 or so in the day buying this dip. Yeah, but I mean, the thing to understand about it, Bao, is that Nvidia's EPS has increased over 400% in the same period of time, right? So their earnings per share have increased over 400%. Their revenue has increased in a similar percentage versus their price increase as well. You know what I mean? So like if we're looking at their revenue and earnings per share increases versus their share price increases, it's pretty similar, you know. It has run very parallel to the price increases. You know, the PE ratio has mostly stayed the same over the last year, you know. And so when I hear people say Nvidia is really extended on the upside, and again, maybe it is. I'm not saying it's not. And I tell people those metrics, it's usually like, you know, they don't really have an argument for it per se. And again, if you do have an argument, I'm open into listening. I'm not saying you're wrong, right? But when I tell people that, you know, I never really get a response. All right, guys, Nvidia dipping down to the 200 EMA. All right, so we're very choppy at the opening bell. Right around where we opened right here. We're a little bit underneath it, but very flat. Nvidia's still trying to test $800 a share. Again, I guess this is the same example where I don't ever really get a response. Nvidia's got to get over this previous closing price. This is the red to green level, so Nvidia is completely flat on the day right now. Nvidia has to get over this level. You know, it's a big resistance level, and this level could certainly reject Nvidia and drag the market right back down. Nvidia pulling back to the 200 EMA now. We'll see if it bounces there. Yeah, Meta's down a bunch. We ended up buying the dip on Meta though after the release. We bought it, so we're pretty much flat on the trade right now. But we did have to sell a little bit earlier, so we'll see what happens. Yeah, you know, it's just a weird thing. Like, I hear people all the time saying, Nvidia's extended, Nvidia's extended, Nvidia's extended. And then I'm like, well, you know, the earnings per share has increased about the same amount as the price per share. The revenue has increased about the same percentage as the price per share, right? And so in that regard, it's kind of parallel with earnings to price increase. It's about parallel, you know. And I never really hear a response from that. Like I never really hear another argument back from it. And again, I'm not even saying Nvidia is high or Nvidia is not too high. I think the biggest risk for a market crash right now is if Nvidia goes back down to like $600, $700. I think that could push the whole market down a big percentage, you know. And so I guess my point is I'm not necessarily disagreeing with them, but basically what I'm saying is that there's arguments on both sides, and I understand both of those arguments, you know. All right, Nvidia back up to 796s. Let's see if we can break $800 today. That's a good sign. All right, Nvidia just ripped up, tapped $800 a share. Depends on whether we think $800 is going to turn into resistance or not. I guess we'll buy it, but it's a risky buy if Nvidia rejects here. It's under the previous closing price, or it's over the previous closing price, I mean. All right, we'll take half off of this just to protect the trade. No losses today, day trading. We've been keeping it really short, really small, really tight here. I'm gonna add to this. Nvidia's over 800. At least it was. See, this is the problem with trying to keep, like I was trying to keep my perfect accuracy, and I ended up holding a losing position just way too long. I'm going to cut this. I don't care about my losing position. I'm just going to get out, and then hopefully this last position can work for me. That was my first loss, taking half of that off. I could probably get out green on this one. You know what, I will. I'm going to go ahead and get out green. So we're up about 100 still in the day. Could have been a lot worse. Nvidia is the one that helped us get there, though. Nvidia at 801s right now. 802s, 803s, almost 805s. All right, market's ripping back up. Look at Nvidia chat, all the way over 805s. Very interesting. Coming all the way back from GDP data losses here. Still not quite back though. Here's the GDP data losses, so we still got a long ways to go on the NASDAQ at least, but yeah. I'm gonna ban this guy. This guy looks like he's just promoting his own stuff. Nvidia up to 809s, 810s almost. Huge rebound for Meta, Nvidia, Tesla. Google's down a bunch. I didn't realize how much Google was down. Although Google's bouncing back too. WTF, market is converting. Yeah, I mean, listen, this is why you shouldn't always be like, every day the market's not going to crash. Predicting that the market's going to crash every day is usually a sucker's bet, and it's something that I see regularly from new traders on the stream, and then the market doesn't crash, and then sometimes they get mad at me like it's my fault. In the end, best bet is just to, like, again, zoom out, understand. Market crashes are rare. We might have corrections, we might have pullbacks, we might have dips, but they're rare. We're actually green in our meta trade now. I mean, green as we can be. We ended up covering a piece of it already, so still probably red overall, if I'm being honest. Right, man. Honestly, people say the market's gonna crash every day. It's such a simpleton thing to think. 100%, man. Like, I try to tell people, and people are always like, oh, you hate the Bears, bro. It's like, I don't hate the Bears, dude. But, like, imagine if you're me, and every freaking day, multiple times, like, over and over and over again, you see a bunch of rookie traders predicting that the market is just crashing every freaking day. At a certain point, it's like, all right, like, we get it. You're new. You know, that's what I said. There's got to be a positive correlation with how many people are predicting market crashes versus their experience level in trading. Or a negative correlation between their experience level and predicting market crashes. Anyways, meta is up. I don't know if I should take profit or what, but so the market is not overvalued AF in what regard? What major blue chip tech stocks are more overvalued today than they were a year ago? Genuine question. What blue chip tech stocks are overvalued today versus what they were a year ago? Outside of maybe like AMD. You know, AMD's not the biggest market mover either. The Dixie's going up. Is it really? Yeah. Hey, Google's bouncing back too. Our portfolio's looking better. Hey. They're still red on the day, but not that bad. Could be worse. AI biotechs. Yeah, but those aren't blue chips. Yeah, we cut Microsoft. We covered Microsoft yesterday. Or not yesterday, a few days ago. Is it time to buy Microsoft? Microsoft's been what's dragging the market down too. Everything else is doing all right. Apple, Google. Trying to see what's dropping. Oh, it's probably Home Depot. Microsoft's down a lot, but Microsoft's up a lot too, to be fair. Nvidia hit all the way 810s. It could be a choppy day. I'm gonna short because today's a big tech day in which we have a bunch of big tech earnings. So we're gonna short into this. Try to play the range, chop, I guess, easier way to put it, with the small contract size and futures. And there we go. Let's see if we get a pullback here. Kind of flat. All right, took half off there, locked it in, protected. See if we get another flush. We're trading small today, guys, with one contract of micros, so it's just not a huge position. But we're up over 100 today, so that's good. Just kind of slow grinding this account up. Well, giving some back to the market on this last position. Even the SPY starting to bounce back up, so I'm going to get ready to cut this. We break the top of this range, I'm going to get out. I'm going to get out here, I guess. So yeah, we're still up 80 something on the day. Not bad. Yes, we're going to stream Google earnings for sure. Oh, did Nick get banned accidentally? Sorry, bro. Hold on. My apologies here. Got you. There you go. Sorry, Nick. Should have stayed in the short. It looks like my short would have worked, but it's all good. Let's see if tech earnings saved the market. All right, guys, I'm probably going to get out of here. Y'all be good. Again, if you haven't already, check out Apex. Apex is a funded account program in futures. They give you a demo. They test your skill. If you pass the test, great. This is what I'm day trading here. Again, a pretty good day today. We made some money. Not a huge winning day, just a small winning day. Here's the P&L today. So about $100, a little bit less maybe. And that's fine. I'll take it. 7.5 to 1 win-loss ratio. If you look at my last 7 days, you know, we're doing pretty good grinding this account up. This is a funded account. This is a 100K funded account that we're day trading with. Again, the patterns are very similar to day trading blue chips like NVIDIA, but the futures market, there's no PDT rule. I can use these funded account programs to get started for much less. I only paid like $50 for this 100K account. If I lose it, I'm only out $50, so it's not the end of the world. But if I'm good enough to pass it, I get between, you know, I get 100K in funding with a 90% split, and they've paid out over 100 million. Great way to learn how to day trade. Although again, they are a sponsor of mine. You want to confirm all this with them. I'm biased because they pay me money. You know, I'm always honest and transparent about that. If you want to check it out, there's the link. Promo code BT. 2 letters will get you the max discount. And yeah, Chad, I'm gonna get out of here. Y'all be good. I'm still not feeling 100%, so we'll be back later on today for Google, Microsoft earnings. So we'll be back, y'all. We'll see you guys a little bit later. NVIDIA's still ripping out breaking highs, though. Look at that. Nice little movement there. See if it drags everything else up. But yeah, chat, I'm out of here. Y'all be good. I'll see you guys in a couple hours.